Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Paul Fokken, and we're going to be talking about maneuvering your 401k to optimize your retirement. Paul, welcome to the program.
Hey, it's a pleasure, Mike. Nice talking to you again.
Yeah, you too. I'm excited to talk about this because I know that a lot of people kind of are thinking, well, how do I maneuver anything? It's a 401k and I get a statement at the end of the year and there we go. So let's kind of dive right into what you focus on working with your clients and individuals that have a 401k. Why should they seek help with someone like yourself rather than just letting their administrator of their company, just apply the plan and hope for the best?
Sure, Mike, I'd be happy to. When I think about it, I was just reflecting on that a little bit, and it's like it kind of goes back, especially today, when I look back and it's like, when I was mowing lawn, I was 20, 30 years old, 40 years old, no problem. I'd do my own lawn and that, and then it'd be fine. And then all of a sudden, I got a little bit older, closer to 50, and all of a sudden start breaking down. I broke my foot. I had surgery where I had to have two surgeries, put in like 5 screws and then take 5 screws out. And then just recently I had my knee replaced. Now I'm looking at another knee replacement. And it's like, I can't do that anymore. Yep. So I just hire out and have it done.
Yeah.
And so what I think of, especially today with 401ks is, I think people are looking at that. They're maybe suffering a little bit with, looking at their balance and it's like, what can I do? Because, before it was, you didn't really worry about it too much. There wasn't I would say the market wasn't as volatile. It wasn't as twitchy. So when you just had your 401k, you just kind of let it ride, thinking, hey, it's going to go up or down. Eventually I'm putting in and it's going to be okay. But now when you just see the ups and downs and swings and people are like, what can I do? Is there really a way I can get help or maybe get advice? And
I would even
like,
think
hey,
that
today there is.
People might even think, what's the use? I'm just on the outside looking in and I get a statement and that's that. So what can I do? So, I think that they feel kind of that helpless aspect as well, right?
Yeah, exactly. And so what we kind of came up with is the idea of a service called 401k Maneuver. And it's where you can actually get personalized professional account management or advice for your own 401k account. Because, today, again, it's a focus on the individual. A lot of people out there have a 401k or a 403b or a 457 or even a thrift savings plan. And they're not sure where to turn. And it's like, hey, a lot of people don't know that they can get help. And when you're talking, 80% of the people that don't make changes to their 401k, and it's kind of, why is that? And I think some of the reasons are just, talking to somebody or trying to talk to a financial advisor or somebody else, they're just apprehensive or fearful to admit they, may not have the knowledge or something. And it's like, hey, it's okay. That's why we're here. We want to help those people that do not have, maybe not have that expertise.
Well, also, is it even possible to get help from someone like yourself when you have a plan with XYZ company? Because I know for me, I would think, before I met you, I would think, well, my company has this and Paul can't help me do anything. He's external.
Yeah. And it's interesting you brought that up, Mike, because right now we've, I think since we've had it going for about a 2 or 3 years now, we got over at least an individual that's in over 200 companies that are using this service called 401k Maneuver. So, and it seems to be growing about, every year, every quarter where we're adding some more companies that at least an individual or even a whole company is saying, hey, let's get our employees that advice. And, another idea might be one employee tries it and they see the benefits of it and then maybe they tell another employee and, why not share in that wealth, so to speak, if you can, improve that retirement. I mean, that's our goal, and my passion, has always been trying to help people or educate people. And it's like, we want to have, people that have that opportunity to have the most retirement or that biggest retirement nest egg they can.
Well, agreed. And I think that a lot of people might think, well, what's the point? What's the use? What difference does it make? So talk a little bit about the benefits, because, you think about your 401k and you think long term, because it's locked up. It's not like you can go down to the bank and pull out some money easily and put it back in. So 401k is like, that's my long-term retirement. What kind of difference really does this make?
Sure. I'd be happy to tell you that. And even just a little bit going to the history, again, kind of going back, it was kind of more just buy and hold, where you just put something in, you just let it go. And then there started to be some automatic rebalancing, but it was kind of between, equities and bonds and whatever that percentage is. And so it was okay for a while, but now you're kind of finding out, well, it depends on the interest rates and things like that. The bonds might be as bad as when the market is volatile. So sometimes rebalancing doesn't always make sense either. Plus, if equities are going strong, then why not be in the equities? Yeah. And so the idea behind it is that if you can get help, and you have somebody that's kind of working in your best interest, because as a fiduciary, that's what we have to do, is work in your best interest based on, your goals, your age, your desired retirement, your, situation or family situation, whatever that might be. And what you find out is the people that are getting the help are seeing, the research shows you're getting like 3% more net of that fee that it costs to get that help. So it's like, why not? Why not try that? Yeah. Try it for a month or 90 days or, a year and see if it might make a difference.
Because while there might be a fee that's layered into the 401k, it's not out of your pocket. It comes out of your 401k, but you can then show people after 6 months, a year, 2 years, whatever the time frame. Well, hey, look, here's our fee that came out, but look at your increase that more than made up for the fee plus some. And so I think that makes people feel comfortable. Number one, that it's not a cost, but number two, that there actually is a benefit rather than just letting it ride.
Yeah, correct, though, but I'll have to clarify on one point, Mike, and that's if it's an individual that just signs up for the 401k, it's just kind of a digital platform that we sign up, but you have to have a credit or debit card to take the fee out if it's just the individual. Okay. Or if you have an account that's already existing with TD Ameritrade, then we can take a fee out of that. But unless the whole business or company agrees to having the 401k, then we can't, we can't take it out of the account, at least not yet anyway.
Got it. Yeah. And that's a really good clarification. We want to make sure people are clear on how that works. But the bottom line is you strive to provide such good results that it overcompensates for whatever the fee is.
Exactly. And that's another incentive, for an employer, you get 2 or 3 employees, then it's like, hey, we like this, but, maybe we'd like to see it taken out of our account and not out of our debit or credit card, each month. Why don't let's get everybody on board? And we could talk about that, in another session.
Sure, yeah. So let's talk about something. When you think about allocations and redistributing and how aggressive you need to be, should be, talk a little bit about how that should work, because I know that probably you're going to talk about age and how soon till you retire and how much long and how much runway. So talk a little bit about being aggressive and balancing out your 401k investment portfolio.
Sure, be happy to, Mike. There's a couple different, scenarios or situations to think about. The first might be, kind of my philosophy and our philosophy is with 401k maneuvers, like if you're still putting into your 401k, then you might as well just be a little more aggressive, because when the market's going down, you're still putting in opportunity to, to buy more. So then as it's going on the upside, right, another chance they increase that balance maybe. And if even you can put more into your 401k, you might see where you can kind of get back maybe through that volatility. Does that make sense?
Yeah, because, we're not day traders buying this stock and hoping to sell it in a day or two or 4 or 6. You're in it for the long haul. So you see a dip in the market and you just sit tight. And that means that if you are continually putting money in, and, this, correct me if I'm wrong here, but, if you're in this certain sector and you see that sector going down, but your advisor is going, hey, just hang tight because we feel it's going to go up. Well, you're putting money in at a lower price per share or whatever the case is. Now, when it starts coming back to life, you're now getting that benefit, and you've already bought low, and now it's the value is rising.
Yep. And, that's kind of the idea behind it. And, the other thing, case in point is, a lot of times people that are in 401ks will get defaulted into this kind of target date funds. They've been around for a while, but what happens is that, as you age, it's supposed to maybe alleviate some of that risk and, being aggressive, which makes sense. But there was just kind of an article out that was in 401k Specialist Magazine that pointed out the last quarter or the first quarter of 2022, it seemed like no matter what you were in target date funds, whether it was you were younger or older, you lost about 5%. So, it seems like something there might need to be tweaked a little bit if the theory is supposed to hold true. But that's one thing I like about getting your independent, personal professional advice, because then we can look at each individual account, each individual investment menu that is available to them and say, hey, this is, let's get out of this right now. This doesn't seem like it's working. Let's go into this for a while for 90 days. And then after another 90 days, we can look at it again. If things are status quo and maybe we don't need to make any changes, then we won't. But if it looks like, hey, here's this fund in here that's really looking good, let's, get a little more asset allocation or diversification in that,
Yeah, I would think that a lot of times, and this is just a broad blanket statement, but a lot of these 401k plans out there that an employee would be given, they're kind of, basic and plain Jane and vanilla, and you get what you get and you're confused. So, okay, just sit. But when you start working with someone, you now have the incentive to perform well for them so they maintain your service. When you then sit down with someone and you look at their allocations, what is typically one or two main things you see that you watch for so that you can zero in to give them the low-hanging fruit benefit right off the bat?
Well, it just kind of depends. I mean, if it's maybe a default fund, it might be something to kind of take a look at and say, here you might want to think about maybe diversifying a little bit more. Maybe don't have necessarily all of it, maybe in a certain type of fund or whatever that might be. And again, though, first we want to get to know the client or the person that has that 401k type plan. And it depends. Like, we might say we recommend being aggressive, but they're conservative. We're not going to be aggressive. You can recommend, but ultimately, again, it's the individual's 401k plan. And as a fiduciary, we're going to do what's in their best interest.
Yes. Well, and let's talk about that. I think a lot of people hear fiduciary and they're like, what is a fiduciary? So talk a little bit about what it is and how that benefits someone when they're talking with you.
Yeah, and just kind of like I mentioned, it's like we have to act in their best interest. So it's not so much that, we're going to make commissions or whatever on something where we're going to make trades or we're, married to a certain type of mutual fund or certain type of company. We're not. So as a fiduciary, we have to be out there and pick the best funds or try to pick the best situation and strategies that are going to work best for the client or for the person that has that 401k. Yeah. And, you see, I think today you just see too many people getting lumped in, and they're just all lumped into a certain strategy or a certain situation. And it's like, people are different, Just between you and me, somebody might be more or even aggressive. There's a different term between aggressive. How aggressive, are you or willing to be, what is that risk? And, it just depends. It doesn't matter if you're 30 or 65 nearing retirement. Maybe somebody has to be still a little more aggressive to achieve their goals or something like that. Just that's what we, really want to look at. And that's what a fiduciary has to look at. And a lot of times you need to get that whole picture, that whole financial picture to make those best decisions for that client, especially when it's a retirement.
Yes. And that fiduciary is a legal responsibility where you must provide the best advice for people and you can't hold back. And so, when you're talking to a financial professional, you want to make sure that is a classification that they have to make sure you're going to get really good advice.
Exactly. Yep.
I'm sure on the other hand, there's an alternative, the horror stories in the financial services world where it's like, oh my word, this person gave me advice that just really was horrible. So, you want to just make sure everyone's on the up and up and someone that has that fiduciary, designation as well as responsibility is huge. So, well, Paul, let's do this here. Someone's listening to this going, well, that 401k, it's kind of collecting digital dust, as they say. I look at my statement once a year and don't even know what it means. Maybe you should give it a look and see what you can do for us. What's some closing thoughts or some ways that you could help someone understand how this 401k maneuver could help them more? And then what's the best way they can reach out and connect with you?
Sure. With the 401k maneuver, the other thing to think about too is you might have like some other existing 401ks from a previous employer. Oh, yeah. And, there are a couple options. You can leave it there, or you can roll it over into something else, may roll it over into another plan. But another one was 401k maneuver. And sometimes if you're able to stay in it and there's certain profit sharing, and it looks like those returns are pretty good and you don't want to keep some of it there, then we are still able to manage that 401k as well. And some people don't think about that too. So, again, you're just kind of set it and forget it. But if it's still there, it's like, hey, maybe I should look at this service and see if I can get that 401k a little boost too.
Yeah, breathe some life back into everything and get that momentum happening.
And that's what, again, kind of goes back to that fiduciary role. So if somebody's, has a question about that, we're going to look at that. What is the best situation? The best situation for them might be to roll it over or leave it where it's at. It just depends.
Yes. Awesome. Well, what's the best way someone can reach out and connect with you and maybe get some resources to help educate them on what a 401k maneuver looks like and how it could benefit them?
Yeah, there's a couple things, Mike. If you go to my website, which is www.fokkenfinancial.com, and you scroll down, you'll see 401k maneuver. If you look at my services on 401k maneuver, you can click on that. There's a couple things. One thing you can do is download a guide, and so that'll give you a little bit more information as well. And then the other thing, if you want to talk to me about it, is like, hey, I didn't know that we, there's another alternative, somewhere else we can turn, at least have somebody take a look at my 401k. Be happy to do a consultation with you. So you can just go on there, click on that, and sign up for a quick 15, half hour, whatever it might be, consultation, and be happy to see if 401k maneuver might be a good solution for you.
Excellent. Well, Paul, thank you so much for coming on today. It was real enlightening to hear about some of these neat techniques that you can work with. So thank you so much, and I appreciate your time.
Oh, it's my pleasure, Mike.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.